Hello, beautiful people, and welcome to another brand new edition of the ITU Forex class. In this week's episode, we're actually going to be talking about the fractal indicator. Okay, so the fractal indicator is one of the indicators which I personally find to be one of my favorite indicators to use in the forex market because it actually helps me to identify turning points in the market, swing highs, swing lows, and then trade in the direction of my established trend, which we're going to go into details about all of this, but I'm just giving you a brief overview of how I use it. Okay, so I found the fractal indicator personally to be very effective in identifying trade entry levels. Okay, so first things first, what is even the fractal indicator? What is it? So to add the fractal indicator to your chart, you'd need to click on the Inserts tab inside MetaTrader if you're using the MetaTrader trading platform to trade. And then when you hover your mouse's cursor over indicators, you're going to need to hover your mouse's cursor over the Bill Williams tab of indicators and then select fractals. Okay. Once you do this, you'd have a little bit of settings you'd have access to customize if you want to customize it, but basically I don't do much customization. Maybe you might want to change the color, but for me I just keep it as black. And sometimes if I want it to be a little bit more pronounced on the chart, I could use one of these lines, okay, which is a little thicker than the other the ones at the top. So let's just use the second one here, and then if you want to choose a specific time frame where you want this indicator to be shown on, then you can select that. If you want it to be shown on all the time frames, you just toggle this here. And if you want to select specific time frames where you just want the indicator to be shown, then you can select that here and just click on OK, and it's going to be added to your chart. So immediately after clicking the OK button, you can see that the indicator has been added to my chart. Okay, but if you don't know how it plots what it plots, then obviously you're just going to be seeing these things that look like triangles on your chart up and down, and you don't know what they are or what they are signifying or how they even work, right? So let's break it down. So when we're trading the markets, okay, ideally what usually happens is, I've mentioned this a couple of times, what you would find is that if price is in an uptrend, it's usually not going to move up in a straight line. Okay, that rarely happens, no matter how strong a trend is. What you're usually going to find is when there's a trend in the market, no matter how strong it is, price is usually going to make a high and then it's going to pull back a little bit, retrace its steps, sort of. Okay, and then it's going to try to move higher than the previous high where it got stopped out, where it retraced from previously. Okay, and then it's going to make a brand new high. This is if the trend is going to continue, if it's a healthy trend, okay? And then it's going to pull back once again a little bit. And then you'll continue doing this over and over and over again. We've talked about this during our market structure classes. So if the trend is truly a healthy uptrend, what you're usually going to see is the formation of higher highs and higher lows, higher highs, higher lows, higher highs and higher lows, okay? But since trends don't last forever, what usually happens is after when price would continue forming these higher highs and higher lows, there's going to come a point in time where the momentum which is pushing price to break above the previous resistance areas where it's started its retracement from, when the momentum starts to weaken, then price is going to find it increasingly difficult to break above those resistance areas. And so eventually price is either going to just slightly break above it and then reverse, forming something like a double top, or it might just come, maybe close to it, but not really testing it. And then all of a sudden, price is going to stop making higher highs and higher lows. And then it's going to reverse to start forming lower lows and lower highs. Okay, so we've basically had a shift in the trend. Okay, so now that you understand this same thing that we explained for an uptrending market is the same thing that happens for a downtrending market. But there's one thing I want you to pay close attention to. You see, when we're in an uptrend or in a downtrend, those price levels where you're usually going to see price pull back from or retrace from, These levels are usually called swing points. So when price was moving down, where it got retraced, where it got rejected from this support area, and then it started moving to the upside, is going to be considered as a swing point. It's going to be called a swing low. And then where price got rejected at when it was trying to make this retracement and then it started moving down is going to be called a swing high. So again, when price got rejected at this support, this is a swing low. Again, when it got rejected at this resistance, this is a swing high. Swing low, swing high, swing low, swing high continuously. These are what these levels are. Now, if you're a price action trader who uses no indicators whatsoever, then you're going to have to manually look at price action on your chart, and then you'd want to see where price got rejected, where price is, retracing from, all of these things. You'd have to do it manually. And this is where the fractal indicator comes in, because the idea behind the fractal indicator is that it identifies areas where price which acted as a turning point in the market, and then when it sees these areas, it indicates those swing points, the swing lows and the swing highs. It indicates it to you on your price chart using the fractals, up fractal or down fractal. The rectangle, the triangle which looks like a down fractal, like it's upside down, is called a down fractal, and the one that looks like is at the right side up. Okay, this is called an up fractal. So what do these fractals indicate on your chart? Again, this is exactly what I just told you if you've been following. Okay, when you have a swing point on the chart, so you can see that price has been going down, but then all of a sudden price came to this level of support, using this as an example, and then when it came here, it couldn't move any further down. But then when it reached this level, it reversed from this level and started to move up. As a result of this, this is a swing point. In fact, this is a swing low. And so the fractal indicator drew a down fractal to indicate to you that this was a turning point in price action on the charts. Okay, and again, we could use this as an example. So price was, after reversing from moving down to now moving up, it came somewhere around here, and then when it couldn't go any further than this level, it now got rejected at this level and it started moving down. And so this up fractal is showing you that this was a turning point. Price was moving up, but then when it hit resistance around this area, it couldn't continue moving further, and so it got rejected from that price level, and this was a turning point. So this is a swing point, and this is what the fractal indicator is showing you. But how are these fractals formed? Is it that price just randomly sees spikes in candlesticks and it just draws this, the fractal indicator just draws an up arrow or a down arrow on your chart? Obviously, that's not the case. The fractal indicator is only printed when there's a completed, it's only, okay, let me put it this way. The fractal indicator is only printed and it's not going to repaint. Repainting means it's not going to disappear from your chart when a 5 candle fractal pattern has completed forming. So let me give you an example with an illustration. Okay, so ideally what happens is, let me quickly use this and clean up the chart so that you could see this a lot clearer. Okay, so let's use this rectangle as an example, okay, of what candles would look like. Okay, so remember I told you that the fractal is a 5 candlestick pattern. Now ideally what tends to happen when a fractal indicator is formed is that, let's assume this was a candlestick, so price was moving up, and so as a result of this, price moved up, and then the candle after this, price moved, it opened here, it moved down a little bit, but eventually it moved up slightly, above the previous candle's high. Okay, and then this candle closed here also, and then we had the third candle in this sequence of candles, and this one went all the way up here. But then after this candlestick closed, price now opened somewhere around here, or just to make it look a little bit more realistic, let's say this candle had a high, okay, which was printed somewhere around here. This one, let's say it had a low somewhere around here, just to make it look a little more realistic, okay, like a real candlestick does, obviously. Okay, so let's say this candle went all the way up here. Okay, and then you can see that this is the high of this candlestick, and then eventually this candlestick, its close was its high, and then the third candlestick, this high was its peak, and then its close is a little bit lower than its high. But in essence, what these three candlesticks are showing you is that price has progressively moved from lows to a higher point consistently. Okay, now for a fractal to form above any, or let's just say above this candle, price would need to find it difficult, okay, to break above the high of this candlestick. So let's say this was the closing price, and then all of a sudden the next candle that opened somewhere around here, instead of going up to break above this candle's high, let's assume that it goes low, it forms this low, okay, and it closes below this candle's low. And then let's say we have a little bit a high that, you know, just barely reached here, but it didn't break above this high. Now at this point, if you're using the MetaTrader platform, you would see a fract. If this candle has successfully closed like this, okay, and this candle didn't break above this candlestick's high, you would see the fractal form above this candle. Why? Because it's showing this is showing you that the previous two candles before this candle, their highs were not as high as the high of this candle. And after this candle closes, if its high isn't as high as this candle's high, this indicator is showing you that, okay, this could be a turning point in the market. Because if price fails to break above this high, and then this next candle closes, then this is telling us that this is likely a turning point. And so price has been going up, but when it reached this level, it couldn't break above this level. The next candle couldn't break above it. And so as a result of this, there's a likelihood that even if it's temporary, price is likely going to move to the downside. And so as this fourth candle closes, okay, and then the candle after it begins to form, okay, it begins to form. This would not be a good drawing for that. Okay, let's say it begins to form because it closes here and it opens here. If for whatever reason this candle closes like this, then this fractal is not going to repaint from your chart. Remember, I told you that repainting is when an indicator will appear on your chart, but then based on some move or some dynamic in price action, you know, that indicator will be nullified and then it will disappear from your chart. So if this candle, 5 candlestick pattern completes forming like this, then this indicator, whatever happens, this fractal is not going to disappear, because this is showing you that the pattern, the 5 candlestick pattern has been completed. The candle in the middle has the highest high than the 2 candles before it and the 2 candles after it. And so this is likely indicating to us that this is a turning point in the market. Okay? Now, what if this wasn't the case? This candle didn't close like this. And so during the formation of this particular candle, okay, it started forming like this, okay, at the close of this candle, it started forming like this. And so all the while that it was forming here, it didn't break above this resistance, the fractal would have been printed above this candle. But then the moment that this candle breaks above the high of this previous candle, that fractal is going to disappear. This is because it's almost as if price is telling us that, okay, this is likely going to be a turning point as long as price doesn't break above this resistance. But then if for whatever reason during the formation of this candle right next to the candle which had the fractal, the highest high and the fractal printed above it, price is able to break above its high, then this is telling us that, scratch that, this is no longer likely to be a turning point because price has just continued to form these consecutive highs and it has broken above this resistance. You don't need to, in a sense, you know, memorize all of this, why this is forming and why this happens, okay? Because this is just, I'm taking my time to explain this to you, because having a basic understanding of why this indicator prints on a chart is going to give you, you know, a deeper understanding of why I use it and how to use it like a professional trader. That's just the reason. Okay, so if you find it a bit confusing that, you know, okay, when this candle is forming, or that's what this platform is meant to do. Okay, it's meant to do all of the, you know, hard thinking, the calculations and the mechanics and everything. It's meant to do it for you automatically, as long as you just add the indicator onto your price chart. You don't need to do anything else. Okay, so I'm just taking my time to explain this to you so that you understand the logic behind the formation of these fractals. So what does this have to do with anything now? Okay, Well, if since you now understand how these fractals are formed, and fractals are indicating turning points for you in the market, the way I tend to use fractals is, if you've been trading, if you've been following any of these classes, you know that I'm a trend trader, okay? And I trade based on multiple time frame analysis. So once I identify that the direction of the trend on the higher time frames, for example, is moving in a certain direction, I would go to the lower time frames to find trade entry and exit levels in the direction of the trend which I identified on the higher time frames. Now, what does this have to do with anything? Assuming for this particular chart that we're looking at, this is just an example, okay? Assuming I looked at the higher time frames of this particular chart, this currency pair, and then I identified that the direction of the trend on this particular pair is a downtrend. And so I'm on the 1 hour time frame of this chart, which is the lower time frame, looking for a trade entry and exit opportunity. So my trade entry, my stop loss level, my take profit levels, everything in the short direction, because the direction of the trend on the higher time frames is bearish. I'm only interested in taking short trading positions on the lower time frame. So assuming I've done this analysis, the way I use fractals is, for example, after I see that a fractal has formed, like this example here, what is this fractal telling me? This is telling me that for a moment in time, price was moving up, and then all of a sudden it failed to continue moving up, and then it started moving down. But then, even at the moment that it started moving down, it reached a level where it couldn't go any lower. And so the two candles before this candle where the down fractal was printed, they had lows which were higher than the middle candle, which had the lowest of the lows of these candles. And then the two candles after the candle which the down fractal was printed below also had a low which is lower than the two candles. And so this was a turning point, because after this low was formed, price couldn't immediately break below it, and so it turned and started moving in the opposite direction. Now, for me, since this is a turning point and I've identified that the direction of the trend on the higher time frames is down, the logic which I use to identify trading opportunities based on the fractal indicator is that when this turning point has been identified, my reasoning is that if for whatever reason price is able to, after getting rejected at this point, after making this point become a turning point where it bounced off of and moved to the upside, if for whatever reason price is able to regain momentum, since I know that the higher time frame trend is bearish, so if for whatever reason price is able to gain momentum to start moving in the downside, and then it's going to come all the way down to break below this low, which was a turning point previously because of the formation of this fractal, then my reasoning is that since the direction of the trend on the higher time frames is short, is bearish, then this particular move would be a very strong bearish move. And so this is how I use fractals to identify breakout trading opportunities. Okay, so you can see, for example, for this particular trade setup, if this would have been my trade entry, and let's say my stop loss was somewhere around here, this is a hypothetical example, okay? So this would have been a trade where, for example, I would have taken this trade here, okay? And then if I'm risking 1 to make 2, remember we're using good risk to reward, good risk management here. So we're not risking more than 1% of our trading account capital on each trade we take, and we're using proper risk management, meaning we're keeping our risk consistent on each and every trade we take. And then when we are aiming for a profit target, we're aiming to make at least 2 times what we're risking on the trade, so that even if we end up losing more trades than we win on average, because our wins are much bigger than our losses, then we are going to eventually end up being profitable. Okay, so assuming this was my logic for finding this trade entry, and then this was my stop loss, and this trade got triggered here, obviously, as you can see, if I entered this trade with a sell stop pending order, you can see that this trade would have hit my profit target here. Even if, it didn't hit it when it come here because of spread, or whatever, when it came here because of spread and all of that, eventually it reversed up, but it wouldn't have hit my stop loss, and eventually it would have hit this particular profit target. Does this mean that every single trade I take using the fractal indicator that it's just going to automatically turn out to be winning trades? Obviously not. If you've been following the channel, if you've been following this ITradeup Forex classes, you'd know that I'm very, very keen on the fact that, you need to do proper risk management, because no matter which trading strategy you're using, no matter how good it is, you're not going to win 100% of the trades you take. In fact, from experience, most of the strategies that I trade with, they give me a win rate which is around 40 to 45%. It's not even up to 50%. But I've told you the secret here. And this is the secret of professional traders, okay? What we do is we make sure that since, let's use the hypothetical example that our win rate is lower than 50%. So we lose slightly more times than we win. To compensate for that, we aim to make a profit which is at least much more than what we lose on average. And because of that, when we lose more trades than we win, in this case, with a 45% win rate, assuming we take 100 trades, and then every single trade that I lost, I was only risking 1%. This would mean that my gross loss will be minus 55%. But then, let's say every winning trade I took, I made a profit of 2%. So I was risking 1% to make 2%. And so every winning trade I took gave me a profit of 2%. So since we had 45 winning trades, 45 times 2, which is the profit from each winning trade, this would total to be 90% gross profit. So when you subtract that 55% gross loss from the 90% gross profit, you would still end up with around a 35% net profit, even though your win rate is less than 50%. Okay, so this is the secret of the game. Whichever trading strategy you use, you're not going to win 100% of the trades you take. This is just, you have to have this at the back of your mind. And you don't even need to. You don't need to win, 100% of the trades you take to make money from trading. Okay, that's why risk management is so important, because you can't just risk 1% and then when you lose a trade, you get all emotional and all of that. You get all riled up and whatnot, and you start risking like 10% on the next trade, because that's going to mess up your numbers. You need to keep your risk consistent. Okay, so moving on. If this was an example of a short trading setup, okay, now let's look at an example of a long trade setup, for example, just to make it easier for you to grasp. So let me see, which pair am I going to be using as an example for this? Gold has been going up for quite a while now, so I think let's use gold as an example just to clear the air, okay? Just to clear the air. Let's even use a higher time frame. Very good, very good. So let me quickly add a template to make it appear clearer on the charts. And then you can see gold has been flying. Okay, so it's been making all-time highs. It's just been going up and up and up and up. So what do we have here? What we have is the gold chart, and this is the 4-hour time frame. You can see that this is just raw price action. We haven't added any fractal onto this chart. But even without adding the fractal, and this is partly because I've been using it for years, you don't need to do this. This is just, I'm just trying to explain this to you to help you understand it better. But even without adding the fractal indicator, you can see clearly that this was a turning point in the market. Why? Because the two candles before this candle in the middle, their lows were not as low as this candle's low. And the two candles after this candle in the middle, their lows are not as low as this candle's low. So automatically, even without adding the fractal indicator on my chart, I know that this is a swing low. The same thing could be said for this. Okay, and the same thing could be said for this candle also. I know this is a swing high because the two candles before it, its highs are not as high as this. Two candles after it, its highs are not as high as this. Okay, so with that said, let's add the fractal indicator onto the chart, and then here. Okay, so you can see where I showed you. You can see we have a fractal here, we have a fractal here, we have a fractal here. So if you use it for quite some time, you're going to get a knack for it. Okay, but you don't even need to know why it's formed. Just add it onto your chart and use it like this. So how would we have used it like on this particular chart? How would we have used the fractal indicator to identify trade entry levels? First things first, remember what I told you. The way I use fractals is, I don't just look at the down fractal and say, okay, I'm going to short, or up fractal and say I'm going to go long. I use it in the context of the direction of the trend. So in this situation, you can see that this particular chart, price has steadily been going up. So assuming that the direction of the trend on the higher time frames is bullish, we've already established that. We've seen it with whatever trend identification methodology we used, we know that the direction of the trend on the higher time frames is bullish. Now, what we would do is we would wait for a up fractal to form, and then when price starts pulling back, we're going to place a buy stop pending order with the logic that if price is, for whatever reason, after beginning to turn away from this level, if for whatever reason price is able to regain more momentum and break above the turning point which it had here, then there's a high chance that price is going to continue moving up. And so in this situation, the example would have looked something like this. Let's say we're using this particular up fractal as our trade entry level. So we placed a buy stop pending order here, and our stop loss was below the swing low. Okay, you can see that price would have triggered our buy stop pending order somewhere around here, and then it would have easily hit our 1:2 risk to reward ratio profit with a stop loss around here. Now, again, I'm re-emphasizing this because I know a lot of people would, especially beginners, would want to, start thinking, oh, but this trading strategy works 100% of the time. It's the best thing since sliced bread and all of this. Yes, but no, okay? Whatever trading strategy you're using, if you don't use proper risk management, it doesn't really matter. Because if you use poor risk management, even if your trading strategy wins like 90% of the time, if that one losing trade you take, you are indisciplined and you risk 50 or 60% of your account's capital on it, and it turned out to be a losing trade, guess what? Even with a 90% win rate, you're still going to end up losing money. And so even though I'm showing you winning trades in this example, this does not mean that this particular trading methodology will give you winning trades 100% of the time, and you don't need it. That's the point I'm trying to pass across to you. You don't need a 100% win rate to be profitable in this business. Okay? You just need a method of identifying when to buy, when to sell, how much to risk, which is going to be relatively smaller compared to how much you're going to earn in profits on average. And then you need to do this consistently without giving into emotions such as fear or greed or revenge trading, all of that nonsense. Okay? And that's just the secret of this game. Okay? So this is how I use fractal indicators. I've used this. This is one of the methodologies that I've used to profitably trade the markets for years. I identified the direction of the trend on the higher time frames, and then I used the fractal to identify trade entry levels. Okay, and it's really that simple. It's not rocket science. It's really that simple. Okay, so before we wrap up the class, I would like to use this opportunity to quickly invite you guys to our ITU Forex tools of trades, which are our ITU bots. We've got the SBT, the Goldmine, the ABT, and all of them, which are robots, expert advisors, which are designed to identify low risk, high probability trading opportunities on your behalf, and then place those trades and manage those trades on your behalf without you having to lift a finger, after just quickly going through the setup, which we're going to assist you, show you how to do everything step by step. So if you're interested in any one of them, please reach out to us on the socials or just drop a comment in the comment section, and we'll be more than happy to assist you set everything up step by step. Okay, so this pretty much brings us to the end of this edition of the this week's edition of the ITU Forex class, and I look forward to seeing you guys in next week's edition. Go out there and practice what we've learned here, and then crush the markets. I wish you the very, very best of luck, and thank you for taking time out of your busy schedule to come to this class. May God bless you. I look forward to seeing you guys in next week's edition. Have a wonderful rest of your day, and cheers.